Hi everyone. Welcome to another market talk. It's been an interesting 2 weeks in the markets. Our calls were correct, at least for now. We had a bounce in bonds. I'm sure we will talk about that. Also today we have new all-time highs. Market is crushing bears. It's actually continuing to crush bears, especially in NQ. I'm sure we have a lot to talk about. So let's start with you, Ted. So how are you, and what's going on from a macro point of view?
Yeah, good afternoon. Thanks for having me on, guys. Appreciate it. Well, a lot's going on from a macro point of view. When I was last on, we talked about bonds showing some strength. We talked about maybe some growth slowing. We talked about how inflation continues to slow, but not at the same rate that we had perhaps in the past. So we've got a couple of big events coming up tomorrow in the US with CPI being released along with the Federal Open Market Committee, or FOMC. So let me share my screen. I'm going to be brief on the macro side and take a look at the at some of the charts today, just to see how the trade signals are working. So what do we have today? So touch on macro regime, talk a little bit about anticipated policy response, positioning and market signals and some trades. So when we talked last time, we're basically the agreed upon narrative right now is that we're in a reflationary market regime, which means growth is up and inflation is up. But as we discussed last time, we've started to see that fray around the edges, both in terms of growth as well as inflation. And I think we're in one of those periods of time where we're undergoing some phase transitions, some choppiness in the market, some lack of direction. And in my own world, my stops are being hit more often than not at this point in time. So it's definitely a little bit choppy, and you saw that in today's action as well, as you pointed out in our earlier discussion around the successful 10-year Treasury auction. So my current view, a friend of mine on Twitter X asked me on the 6th, this was before the non-farm payrolls report came out, what did I think about the current market, my current macro view. And so, you kind of get paid in the current environment for a period of time, and then you need to start anticipating what's coming next. And so that's what I'm trying to do. So I shared with him that I thought that growth and inflation were trending lower, that we want to watch for strength in defensive assets. And yet I thought that any sort of weakness in the market, I'm sorry, in the economy might be quite temporary, as Treasury is sitting on over $700 billion in the TGA, or the Treasury General Account. And the thought is that if the economy slows, that the Treasury Secretary will unleash some of that in order to support the market and the economy into the election in November. After November and after the election, whatever that brings, God help us, I expect we're going to be looking at some further deterioration in the economy as we head into 2025. So that's sort of my longer term outlook. Now, where we were, when we talked last time, we last met on the 28th of May, and we talked a little bit about what's happening in growth. And we were talking about how we thought growth was starting to decline some. And I use the Atlanta Fed real-time nowcast as a tracking tool, and this thing has been all over the place. You can see it peaked out in early May at around 4.2%. and declined nicely right into the teeth of the non-farm payroll. We had the ISM manufacturing index out early in that week, last week at 48.7, which was down, showing some weakness. ISM services were relatively strong, but the wage component was somewhat weak. And then we had Friday. And Friday was non-farm payrolls, which came in way above expectation at 272,000. Average hourly earnings increased to 4.1%, which was above expectations. And the U3, which is those who want to work unemployment rate, ticked up from 3.9% to 4%. And there's two surveys. There's the business survey, or the NFP, and there's also the household survey. The household survey, and I won't get into it, showed a lot more weakness than what the NFP survey did, but markets responded and reacted negatively to that increase in non-farm payrolls, particularly the bond market. In terms of overall inflation, we're heading into CPI tomorrow. You can see that we've had a nice downtrend, albeit sort of faltering here coming into tomorrow's core inflation rate. So we have CPI and core inflation tomorrow, and followed by a Fed meeting. I use the Cleveland Fed inflation expectations to gauge sort of a assessment of where the market is. These guys are pretty darn good. This was updated as of yesterday, and we are showing a continued slight decline in both CPI and core CPI. Maybe after today's A-plus bond auction in the 10-year, somebody knows something, but that's sort of the anticipation. So movement on either side of that, those numbers is sort of expected at this point. Just a quick review. I talked about the dynamic positioning portfolio from last time. I'm not going to go into it, but this is the sort of the overview and the systematic rules. And what you'll see here is that over a period of time, from starting in the 3rd of May, the bond allocation of that portfolio has started to increase pretty readily. Equities have maintained, a mid-teens allocation. Commodities have started to show additional signs of weakness, along with some of the alternative assets that I track. And currencies have been all over the place. I did have good strength in the euro until the ECB cut rates last week, and that's been a disaster for everything except my upcoming vacation to Europe. Where a lot of this allocation in currencies now is actually in the US dollar, for better or worse. And cash has started to tick up to about 35%. And I will say it's been one of these rides over the last couple of weeks where trends have started to break some. I have reasonably tight stops in some of my positions. And so as I get in early, and then as stuff starts to break down, I start getting stopped out, and I start taking some of my positions off, about 25% of that position at a time. What's the market response? I'm going to shift over here to some charts. And what we saw we met last time on the 28th, and we were talking about the bond market. This is TLT, 20-year bond. We actually had an exchange on X the next day saying, hey, buy this dip. And so it was a good buyable dip. And then we had really got quickly to the top of a 2 standard deviation range. And NFP came out the next day and sold off. And so, reasonably, you could expect that this was going to maybe continue down, but yet today we had this real strong move in the bond market. So that's kind of a tell. When I put this together this morning, I expected that we might see a movement all the way down to the lower half of that range, but we clearly had a reversal here today. What this is showing, by the way, on each of these charts will show this is trend for me. I use at the end of each week, I look at 55 days of trading days and basically anticipate where it will be at the end of the week, and I use that as trend. So 60 days or 3 months for trend. You can see that TLT has been hanging out around trend, breaking up, breaking down, really in one of these sort of phase transition modes. When you compare TLT, which is in, I'll call it neutral zone right now, and you compare that to something like HYG, for example, which is high yield bonds, that's behaving much better, much above trend. Volatility, this is average true range, which is a realized vol indicator, has been trending down. And this has been a nice core position that flipped bullish for me over the past week or two. It's been neutral, it's gone to bullish. And that's one of my biggest bond positions right now. The dollar remains strong in bid. This was looking like it might be breaking down coming into NFP last week. Here's NFP. Dollar just rallied, up to the top of a 2 standard deviation range very quickly. Two trading days, and we're right there. Now, obviously, we're looking at a resistance point here in the near term. We've got longer term resistance here, but we don't. If we're bullish on equities, we don't really want to see the dollar responding too well over a longer period of time. So always have an eye on the dollar. I don't have real time on crude, but crude just came up a little bit. You can see that crude oil has basically broken down pretty badly, and that's very similar to a number of the other commodities, although agricultural commodities continue to do well. But this is a big inflation indicator. Crude oil under pressure, breaking trends, bearish in my book. When I look at gold, which also had a very nominal day, it's been trading in a choppy range after it had that big move this past spring. I'm still hedged in with a put spread in this position and my GLD position, but it's sort of chopping around in a tightening range. Where it goes from here, unknown. But given the bond strength today, you could expect that reasonably to go higher. Bitcoin, which I consider sort of the sort of premier risk asset, is really showing some signs of weakness. It's not able to clear this. Not only is it not able to clear trend, it's not able to clear this sort of zone of previous highs from the spring. And so this is really to be watched because I do think it really presages what happens with risk assets. As far as SPX, all-time high, that really came in the latter part of the day after the bond auction. It was down pretty much all of the day. VIX has been below trend. It's a couple 100 basis points below trend. It is if you look at tomorrow's the 1-day implied volatility for tomorrow is around 18, but you look out 30 days and we still have a 10 handle on the VIX, 11 handle on the VIX, 11 handle on the SPY vol is what I meant to say, with VIX here, sort of treading water in the lower half of this trading range. So that's sort of I would call that a positive overall for risk assets, and clearly they've been responding well. ComQ, everybody loves Apple today, up 7%. That certainly was a driver of the NASDAQ. Again, another all-time high. And then, with a lot of chop in my personal dynamic positioning portfolio, what I've been doing is sort of taking the other side in my trading account. I use my trading account largely now as a hedging device for my primary portfolio. Last week on Thursday, I had a CPI. I took a position in TBT. It looks like after today, I outstayed my welcome. I am long this position, which I bought on Thursday, performed well, came off today. That's twice levered TLT. But again, it's a hedge. So I've got long 26% bond position in my portfolio. This is really just as an offset to try to neutralize this ahead of CPI. Energy, which is the XLE, I took a position in that yesterday, kind of came down to the low end of the range. It's definitely a neutral trend for me. It's a counter trend trade that hasn't performed all that well and hasn't gotten any traction today. Same with URA. I actually stopped out of this. I bought uranium yesterday, and I was out at 9:40 this morning when it stopped, when I got a stop notice. So have not held on to that position, even though it remains bullish trend. It's just broken down badly. My expectation in taking this position is that it would go higher from here. When it didn't go higher, I took it off. GDX looking like it could be a nice buy here down at the lower end of the range. It is bullish trend, needs to see gold move. We may get that tomorrow. I'd still look at that as a decent risk reward, taking you maybe 4 points higher. Same with DBB, which is the metals, which is metals and industrial commodity metals, aluminum, copper, etc. Still bullish. Really needs to bounce from here, or we may see the end of this trend. but it's one that has a decent risk reward, at least in my book. And then finally, it's sort of like this FES is a Euro Stock 50 index. It's been a great performer for me, but I actually had to start taking some off in the past week as the trend got sloppy and choppy. It's sort of like a be careful what you wish for in terms of, I think the ECB cut right about here or here. And it has not been positive for the European market since that time, as perhaps recession expectations are embedded in any sort of rate cuts at this point. So just a full sort of assortment of different indicators that I look at. It's still telling me after today's action, and we'll see what happens tomorrow, that there may be some more gains ahead in both stocks, domestic stocks, as well as bonds. So we shall see. But that's sort of my view from this vantage. You're muted there, Vi.
Oh, yeah. Same mistake I own every time. Interesting. Totally agree, and especially about the dollar. All these ratios and correlations are holding up, and as you said, it would be not good for equities if we saw a reaction in the dollar. Okay, so maybe Raphael, what about you? What do you see in the markets, and what is your view?
Hey guys, so some things I agree, some things I disagree in what you said, Ted. So I will go over what I see. So let's do screen share. Okay. So so 2 weeks ago, we were somewhere about here, I would guess. I was saying that I was waiting for trade to catch up on price so that we could have a buyable dip. So I was looking at ES and NQ to have a retest of trade, even go to trend to get a dip. And this is exactly what we got. Actually, this day was pretty insane. It went to trade, broke, went exactly to trend on MFR for NQ and also for ES, and we got the bounce back to all-time high. What gave you also confidence in buying on that particular day was the fact that the ranges on SPY and QQQ, if you monitor them in real time, were unable to break down. They were almost during the whole day. So it was that day on the 31st, if I'm not mistaken. You always had an upside downside ratio, which was insane, like 50, 60 on QQQ and SPY. So that gave me actually confidence to buy the dip. So I went with straight with calls. I decided to go on with SPY. In retrospect, I should have gone with QQQ, but still worked. So if you bought the dip with us, you did good. You had the plan laid out 2 weeks ago. If you didn't execute, let's hope we get another dip soon. Now, where we are now. So as far as I can see, we are not overbought by any stretch imaginable. I mean, ES and NQ are not overbought. There is no cap on MFR for neither NDX, S&P 500 here. QQQ, where is it? QQQ, no cap. SPY, no cap. Okay, so I see no reason for now telling us that we are not to continue this move up, especially considering the horse value we have now on QQQ and SPY. So 0.74 on
Yes.
QQQ and also on SPY 0.75. So that basically means that tomorrow for SPY, we have a 75% chance of continuing to go in the same direction that we went the day prior. So this is very, very high, 75%. 0.75 is very high. If you remember, this was the kind of data we had for GLD while it was blowing in the sky several months back. So in terms of pure signal strength, I'm thinking we are going much higher. So that's for NQ, ES, QQQ, SPY. No matter how you play this move in equities, all four are saying no worry. I unloaded my final positions in calls today because tomorrow we have news, and I'm actually expecting maybe a dip to buy. So, and also expiration was mid of June. So I would like to go with longer dated calls if we have a dip tomorrow. And now on to DXY. So DXY has been very troublesome for a few months. It refuses to choose a direction and to stick to it. Okay, we used to have in, I think it was in 2022, clear direction, 2023, clear direction. So either up or down. But this year, it's been very difficult to keep up with it. And so far, all I see in DXY is just let's call it randomness. I mean, it's just bouncing around in a range and unable to pick up a clear direction to go to. In the recent few days, it's trying to get back to bullish trend. But the problem is when I'm looking at my vola indicator, so far there is no clear direction to make a decisive, how to say, decision regarding the trend. I would like to see trade of DXY actually point down. So this white line, if you have access to the script, I want this thing to point down. I want the volatility to go down. If we finally get that, yeah, sure, I will consider DXY in a definitive bullish trend. But so far, all I'm saying is just an asset that is bouncing around. So very hard to base your decision for other assets considering the dollar. So that's my take on the dollar. As for VIX, so I mentioned in the show 2 weeks ago that I expect VIX to remain in a box. This is a box here for a few months. So we had 1 day outside the box. Oh my God! All the bears were calling for market crash, market down 10% tomorrow. And of course, it didn't happen. And VIX came back down. We are back inside the box. And I expect VIX to remain in this box for another few months. What you want to see before you start to call for volatility event, volatility to go up, etc., you want to see trade here, at least cross trend. You want to see price above trade and trend before you start to freak out and imagine that we are going down minus 10%. So far now it's just very calm. Anytime volatility VIX, sorry, is trying to go up, it's being smacked down. So it doesn't mean we don't have more episodes like this. We are going into the 14s, but in my opinion, for a few more months, we are going to get vola smacked down. So in my opinion, no worry in terms of VIX. Regarding European equities, so Ted mentioned that indeed a lot of changes happened there. So for Germany, so DAX, for now we are holding MFR trend. So this one is not a good example to take for volatility rising, but it's to be monitored. Will it break trend or not? we should know in the next few days. So this week and next, we can monitor DAX. The picture is not the same for CAC. Either it's political because people like narrative, or it's just because CAC has been rallying since its bottom in October, end of October, and it took no pause since then. I mean, we are just rallying and rallying, rallying. So we broke trade on the 28th of May. There were no election there. Tried to bounce on my volatility trend, went to trade, confirmed the breakdown in trend. So no election until here. So, but the confirmation happened before. Okay, so now we have volatility rising in CAC, and we have the range going down, still no cap to the downside. So I'm actually looking to buy the dip in CAC, but I need to see several things first. First, I will be monitoring VAI momentum indicator here. I want to see several values getting hit. So we will do a video this week to talk about VIMOMO and maybe how to use it also as another tool for your decision-making process. So I also want to see the cap. I want to see a downside cap. Downside cap being lower range for normal range equal longer term lower range. I want to see that. I'm also going to look at my buy the deep scripts to see if I can find something in CAC to make it trigger and make it automatic, so I don't need to monitor every day. But yeah, I'm looking to buy this one. For now, I think we are not there yet. We should get some more volatility, especially volatility rising, but I'm monitoring this one. FTSE is also another one that broke trend. It broke my volatility, so broke trade, went to trend, back to trade to confirm, and we are breaking. I expect this thing to break, and we shall see whatever happens here. I'm also waiting for a downside cap to appear to maybe consider to buy the dip also in FTSE. So far, volatility is rising, so you never know how low it can go until volatility starts to come down. We are not there yet. This is for Europe. So I'm trying to go as fast as possible. CL. So CL, we reviewed this one also for, I would say, now a month and a half, I would say. We went to min daily trade, and since then, volatility is just rising and rising and rising. And what you get is an asset that is bearish. So it's beautifully expressed here with my fractal range trend, with my volatility trend. So we go to the bottom of the range, we go to the top of the range, we also go to my trend, we go to trade, we go to MFR trend. I mean, it's just beautiful to watch. And we got a sell-off recently, and oh my God, what a surprise. What a surprise, it went to the MFR low of the range. Sorry, it takes time to load. Here, and we got the bounce. Okay, so but so far, trend is still bearish. I would not recommend to buy. You have gold. So gold, same as 2 weeks ago, I'm very surprised we are not getting a sell-off. So I'm waiting for some kind of price action like this here, like what we had in September. I'm thinking we're gonna get a few days, maybe a week, maybe 2 weeks of just selling of gold. I don't know what will be the trigger, but when I'm looking at vola, I'm very surprised we are not seeing at least some dip in this area. So my expectation is we're gonna get some week, maybe 2 weeks of just selling that will offer a buy somewhere. I may be wrong, but I've been waiting for it for months. So far, all we got was just some volatile price action. For Bitcoin, I'm actually thinking we are in the early phase of another rally. So, I mean, I'm looking at vola. Vola is low. It's just barely going to trade so far. If we break trade and trend, of course, I can reconsider. But so far, I'm not worried about the volatility here. So I would not be surprised we get another ramp that will break the previous yearly high here. Ethereum actually looks the same. So far, no worry. We are just retesting MFR trend and my volatility trade. So volatility, you can see, okay, we have some kind of volatile day, but that's it. Now, in my opinion, nothing to worry about. And last but not least, the yields. So in this one, it was actually Vi and Ted called it 2 weeks ago, saying that we could have reached the temporary max on yields. It was a good call. So far, what I'm seeing is volatility on the 2-year. You can see here blue, very volatile, no direction. And what you see in US 2-year is the price just oscillating. So for the 2-year, I see no direction. For the 10-year, it's a little bit more clear. You can see volatility is rising. It has a direction, it's trying to go up. And today may be the confirmation of the breakdown here of MFR trend. So we should get the confirmation this week and the next. Yeah, I would not be surprised if we confirm and we start to see some move down for the 10-year. The 30-year, I believe, looks the same. Yeah, here you can see. So when I'm looking at this, I'm thinking, okay, trend is about to crack on US 10-year and US 30 years. Okay, that's it, guys. Passing the mic over to you. Bye.
Yeah, thanks, Raphael. Yeah, so regarding bonds, first of all, after today's auction, what actually happened made my conviction even stronger. So I still think that this move up in bonds can continue. I don't expect a total reversal in regimes and so on, but I think that we are not done yet. And actually, it was very interesting. I was trading futures, equity futures, as almost every single day, and usually when I see a 10-year auction on a calendar, I mean, I'm not very concerned about equity futures positions if I have any, because I mean, all my trades are intraday. So if I have any, but today actually it was very interesting because immediately after auction data was released, we had a quite aggressive spike on ES and Q and so on. So yeah, so dollar index down, not a lot, but dollar index went down, and but equity index futures went quite a lot. But anyway, I'm looking at bonds both on my side of the pond and in the US, and actually today's action in Bobble and Bund and Schatz is also interesting. So for those who don't know, it's basically German bonds. So Bund is like a 10-year and Bobble is midterm. So anyway, I think that now it's worth. I'll check what happens tomorrow, but now it's worth a shot. On bubbles on the long side, and same goes with a ZN or TLT for those who are not trading derivatives in the US. So I still think that we can have some up move, so down move in yield and up move in bond prices both in Europe and the US. And actually, I was not touching Eurex fixed income futures for quite a while, but now I got my alert, and we'll see if I'm right. Maybe I'll do something with it. And what I'm talking about basically is this. I use financial juice, but basically it's a very good example of what happened immediately after auction data was released. So US dollar index is quite normal, but this spike in SPX was interesting. So first of all, I'm very happy that Raphael mentioned the Hurst exponent. which is on some very important assets, it's insanely high, especially 3-month burst, because we see numbers like 0.79 on XLU, 0.75 on SPY or SPX, also 0.74 on Microsoft. So excuse me. Yeah, and so I need to press a button. Yeah. Okay. So sorry about that, but basically, these Hurst exponents are very high, especially on a prime basis, and like Raphael said, it basically means on a probability perspective is basically 75% that tomorrow it will go to the same direction as it went today. So, of course, we need to keep in mind that tomorrow we have quite important news. Of course, as always, anything can happen, and of course, we will get some volatility. And talking about volatility, actually, not much to talk about. We have SPX percentile at 25%, IB rank at 15%. So from options perspective, nothing panic is not happening. Volatility is low, and I mean we have 10.8 volatility on SPX options, which is ridiculous. So yeah, but correlations. I wanted to touch on correlations because market is going up, but actually average sector correlations, blue line, are actually going down. And what it means is basically market is going up on tech. I mean, we have communications, high correlation. We have tech relatively higher compared to other sectors, but actually not insanely high. I mean, 0.75 XLK correlation to SPY is actually not that high at all. How correlations are changing now? We're talking about 10-day correlations. We see that almost all 5-day deltas and 10-day correlations are going down. Now, about the regime. So first of all, I'll start with SPY UUP, and I want to change time frame, because on a 10-day basis we see that actually SPY and dollar correlation is going up, and it's almost approaching positive territory. But when we go to 30 days, we still have a negative number, but you need to watch this very closely. At least I am watching it very closely. So because if it continues to go up, and maybe even if it crosses a positive number, which I doubt, but sometimes it happens, that can change the entire regime. So stock bond correlation is positive. So no need to try to hide using bonds if you have your equity portfolio. That will not help. But actually, it's good news, at least for now, because both on ranges perspective, trend perspective, we have some bullish signs. Like I said, in bonds, so with correlation like this, it's very bullish for equities. I mean, I expect now this relationship to continue, and correlation to positive correlation to remain. So yeah, my midterm view for this summer is equities up, bonds up. We will see how it works, of course, as always. So what I wanted to say that not a lot has changed, basically almost nothing have changed. Situation is still the same. The trade long equities is not overcrowded. Of course, we see some warning signs that, of course, small caps are not performing as well. But yeah, we still have. If we see buying in other sectors, not only tech. This market can go up aggressively. Of course, worth mentioning seasonality, that now it's first of all, it's a rollover week in U.S. equities futures. Bonds already rolled, so yeah, it's not. But equities will roll, so rollover weeks are always more volatile. Those who trade futures notice, so keep that in mind. But yeah, it's summer, so also volume can decrease. But yeah, be careful with the rollover. I'm continuing to look on the long side when it comes to equities and bonds. And yeah, for now, my positioning is overnight. I'm 100% cash. I have no positions. I do quite a lot of intraday trades, but now my options book is also empty, and because I see no good opportunities to sell volatility, and I see also not a lot of opportunities to buy optionality as well. That's why now my options book is also empty. So yeah, basically my view is the same. We will see if I'm right or not, but yeah, I hope it's useful. Yeah, so Raphael, I don't know if we have any questions. You mentioned that we have some questions.
Yeah, we have two questions just quickly. So there is one bug on the site. It's NVDA. We talked about this before we joined the show. The trend is shown as bearish, but the problem is because in the calculation we are using the crazy candle that happened a few days ago. And because of this,
Yeah.
it appears unfortunately bearish. There's nothing we can do about that because if we remove one data point, the data will not be the real one. Okay, so when this happens, I suggest maybe you use my volatility trade and trend, at least temporarily until this data point is looked over. One thing I forgot to mention also is USO has a cap to the downside. So that could explain also why we had the crazy bounce from the low of the range. And regarding bonds that you mentioned, there is a cap to the upside on CLT. So worth noting regarding correlations. As for the question, so there is one question from Curb. And I think maybe it touches to your correlation, the way you watch correlation. He's asking, could you briefly review all the signals that might suggest topping and correction? So you want to go with that with correlations, for example, because you were...
Well, wait, yeah, so signals that suggest topping, you mentioned that some assets have a cap to the upside. That's the only signal. I have no other signals that suggest topping. Trends are strong. Average correlations are quite low. Yeah, one thing you can use is, of course, take Magnificent 6, maybe. For example, I always used Tesla. Now I'm not looking at Tesla. Tesla is good if you are trading Tesla, but now Tesla is, as an indicator for overall market, it's useless in my opinion. So maybe Magnificent 6 instead of Magnificent 7. But of course, watch signals. So of course, ranges. And other signals on Microsoft, Apple, Nvidia, Meta, and so on to have some clues. Because of course, no surprise that these stocks are moving the market now. Simple example: today, Apple went up like 6-7%. We saw what happened to NQ, but actually Nvidia was not very active because reality of this market is if it was not only Apple, but if Nvidia did the same, the NQ would go up 5%, and we all know that now. So watch these stocks, but now from correlation perspective, I mean, I'm not trying to predict topping and actually from trading experience, I mean, intraday trading experience, especially for years, I mean, you shouldn't look for topping signals. When they are there, you will see them, but you shouldn't, because supermarket mentality will not work in financial markets. I mean, you don't need to look for things that are on sale, but actually you need to buy things that are going up, because all biggest mistakes, and I know that it's a bit of, all this trading psychology thing from Douglas and others, but I mean, when toilet paper is on sale, you can buy it because, I mean, it's a good deal and you will need it. But when the stock is on sale, usually, I mean, you will be better off buying a stock which is more expensive. So compared to yesterday, just like that. So yeah, I just wanted to again do this quick rant, but I see no signals in correlation for topping. So yeah, how I use correlations is basically in two ways. First is, of course, individual correlations to SPY, bonds, or dollars, so asset or ETF, to these to see the regime, or average correlation. And as we saw, average correlations are going down. And when average correlations are going down, it's one thing that it's not signaling is overcrowded trade. So yeah, keep that in mind.
So I have a related question for you, Vi. So what we've seen today, for example, I think XLK, which is the tech sector, pretty much drove the entirety of the move today. I think that was up like 1.8%. Drove the Qs, obviously, and drove SPY, yet, equal weight was down, the RSP, and also IWM was down. And IWM in particular, small caps, is showing some real signs of weakness. So given this dispersion and the concentration in the move, does that mean that you are comfortable with long SPY, long Qs, and maybe consider, obviously avoid IWM or short? How would you take advantage of the dispersion that you're seeing in the non-correlation, I guess, is my question.
Yeah. Very good question. For quite some time when trading futures, first of all, I had RTY DOM also to watch what's going on. So basically, I had ES and Q and RTY and YM. So, and now I only have ES and NQ. I got rid of RTY because that thing is I can't find any signals from RTY that would help me trade ES or NQ. So yes, I'm looking at SPY and QQQ correlations, and I'm really comfortable being long those. And regarding equal weights or IWM or other sectors that are not highly correlated, I only am looking to their signal, not overall signal, but maybe I would short WM if I saw the bearish signal or something, but I'm definitely not using that for my biases on SPY or QQQ. So yeah, as a spread, SPY versus IWM or QQQ versus IWM on a short side is something I always have on my watch list. For now, I don't have any clear reading on that, but yeah, I would do that. I would not, for example, I would not trade IWM on the long side just because I see something on SPY or Qs. But yeah, totally. Like I said, I was also talking that basic market is going on tech, and buy strength, sell weakness is very hard to do psychologically, but that's what traders should be focusing on, and not the other way around, of course.
Great advice.
I want to try to answer the questions about topping and correction. So what you want to look curb. Let's say you are thinking about it, not about like I want to short, but you want to protect the gains that you made longing because you bought at the bottom. So what you want to look for to, let's say, if you think, okay, topping or correction can happen, is a concomitance of different hints telling you, okay, maybe there is a top, maybe there is a correction coming. So the way I do is first I'm going to look at what Vi said. So I'm going to look at the sorry, the how do we call this? The fact that the long-term top and the top of the range and the normal top of the range are equal. A cap, sorry, I was looking for that name. Do we have a cap or not? Okay, so what's the upside on the long term versus the normal term? Then I'm going to look at the upside downside ratio on normal range and long-term range. So this will give you a clear idea. I mean, if you have 0 0.2, 0 0.1 upside downside ratio, suffice to say that, okay, it's not stupid to unload. So that would be the first thing I'm looking at. The second thing I will be looking at is I'm going to look my overbought and oversold indicator. Is the market or is the asset that I'm currently looking at overbought or not? I mean, if this thing is not overbought and you clearly see there are some juices left, of course, you're not going to think about, okay, we have a topping pattern in place. So you're going to look for this as well. The other thing I'm going to look at is VI-MOMO indicator, the my momentum indicator. Where is the short-term MOMO now? Where is the medium-term MOMO now? Where is the long-term MOMO now? So we will go over this in the next video, but I find this script very, very relevant. So relevant that I've actually included the code from VI-MOMO into my buy the dip script. So this is another clue also you may look at. Another one, of course, I'm going to miss some, but another one I'm also looking at is the steps I have highlighted several times about when I think the VIX is about to change regime, when it's about to transition to bullish trend. So price has to go above trade and trend has to go above trend, and price has to retest trade. Once you have these three steps, you know that the game is on. So let's say you have the VIX setup, you have the caps, you have overbought, you have VI-MOMO saying we are at the max. Of course, you're not buying. You know, you should be unloading, and maybe you can take a bearish bet. So it's never one signal. It should be a large number of signals, and your mind should usually always be to think, okay, when there is a potential correction, it's better to unload some of your positions than thinking about catching the move down. Okay, I think we've made these mistakes last year. You will not make a lot of money shorting. You will make steady income just by buying the dips and unloading some when you are at the top. Okay, it's much more stable for your mental health also. So I would guess it should answer your question. Okay, so you need concomitants of hints, not one signal.
Yeah, very good advice, and I will very shortly add, because I just understood the question that the question was about current signals that we see. So no, like I said, no signals. But when it comes to correlations, what I would look at is either very high or very low average correlation. So like we saw 2 years ago and the last year, when values of average correlations of 0.8 and so on, yeah. But then also it's not a signal per se. It's you need a combination, because signal would be high correlation plus maybe cap in ranges, or just basically upside downside ratio or something, and then let's say red candle, and then you short the market and stop somewhere. But like I don't want to repeat same rant again, but I mean, if market is going up and you want to short it, well, you need to short it only when you see at least some red candle to hide, because you need some obvious spot where your thesis is invalidated. That's all you need in trading. I mean, market is going up, you don't short because it's going up. If you're using daily time frame, I mean, you have red candle, you short the market, and your stop is above that red candle. Make sure it's a small stop, of course, relatively to your targets, but that's how you will have way better chances when you use all the signals in combination with some price action. Because same with Momo, same with people who are using RSIs or whatever. Oh, it's overbought. Yeah, but it can stay overbought for a month, for it can, and it happens, and it will happen. So if it's something is overbought and you want to short, so wait for it to at least tell you that, hey, I'm trying to go down. Okay, asset is trying to go down, try to join it. If you're wrong, make sure your losses are small. But yeah, I don't want to have another 10-minute rant about same thing. So.
I don't. We had another question from Ragav, but send him a message saying I'm not understanding the question. Ragav, if you are here, you can type your question regarding volatility. If not, I'll just answer it next time. Yeah, I think we are good. I mean, Curb was the only question in the chat. If anybody has another question, you can type it. And there's a question from Ragav I didn't understand, so I will address next time. So we are good, right?
Yeah, so I think we'll finish. Interesting conversation. As always, thanks everyone for watching. Feel free to always send us your questions. We will be more than happy to do our best to answer them. Thanks, Raphael. Thanks, Ted. See you hopefully in 2 weeks, and bye.
Yeah, and
Thank you.
join us this week. We're gonna do a show about Vaimovo.
Yes.
See you soon. See you soon, Ted. See you soon, Vai. Take care.
Bye. Yeah.
Okay, we are off.